Hello and welcome. You have tuned into Closing Trades right here on ET Now. I'm Shrishti Sharma and with me as always is Snehi Shah. And Snehi, what a start of the week because Nifty has not just gone and moved above that 24,600 mark, but it's 190 points of gain that we are seeing. And yes, of course, 250 points of gain coming in on Bank Nifty. But Snehi, I believe that this particular week is going to be a very crucial and interesting one, especially for both of us because it's the consumption
and autos
that will have the action indeed. And Snehi, that's what we are getting to see on the charts as well. And look at the move in auto counters, be it Bajaj Auto, Hero MotoCorp, M&M, Tata Motors, Eicher Motors. The list is long and these are the companies that are the top gainers on the Nifty 50 side. On the flip side, select pharma counters, select consumption names, they are seen to be taking a bit of a breather. We can't say a sell-off is happening over there, given the fact that no other counter, barring Sun Pharma for now, is having a decline of over 1%. The breadth of the market too is very cheerful, and so is the move in India Wix, very well supporting the bulls sentiment right now because India Wix is down almost 4%. But yes, the consumption and the autos have the action because barring autos, counters like Trent, Eternal, Asian Paints, the ones that Snehi tracks closely, they are having a lot of momentum in today's trading session. Add to that list to select EMS counters, select exchange-related counters. They are a buzz as well. But let's put the spotlight on the auto space, given the fact that a lot of these auto numbers are also trickling in. So let's try and understand that which are the companies that have done very well versus the street estimates. And on your screen, you will have the scorecard as well, where majority of the companies have already declared the numbers. We can see an outperformance coming in from Bajaj Auto, Escorts, TVS Motors. They have done fairly better versus the estimates. M&M, for now, the auto division hasn't able to match the expectation. The reason is that the company is saying that they have actually held on to some of the supplies to the dealerships in anticipation of a GST rate cut. The company will welcome the GST, but they are of the view that once the rate cut happens, then they will offload all these vehicles to the dealership. So for now, there's a miss for M&M Autos, but the tractor division, that has done very well versus our estimate of 24,000. 28,000 is what the company has clocked in when it comes to their auto sales data. Now, Eicher Motors, we have been flagging off the Royal Enfield sales will be in double-digit growth number, and that's what we have seen. Even Eicher Motors VECV has managed to match the expectation. But in the latest, we also have the numbers coming in from Tata Motors as well, and this time around, the company has managed to beat the expectation, and hence the move in the stock as well, because what we are getting to see is that the company has clocked in a total commercial vehicle sales of close to 29,000. That is in line to what we were expecting in, while the passenger vehicle sales is 43,000, a little better than what we were expecting, and hence the move in Tata Motors. So that's about the auto counters. But Snehi, believe apart from that, there are some of the other consumption names that are doing very well today.
Absolutely, Shrishti. Consumption, and not only FMCG. In fact, FMCG was the top losing sector at the start of the day, and that has also recovered beautifully. So even if you don't look at the staples, you have some retail names like Shrishti was mentioning. Trent is doing well. Some broader consumption names like Eternal up in trade today. You have Asian Paints from the entire paint baskets that is also doing very well. Other than that, you have Colgate, Nestle, Emami, Varun Beverages, Tata Consumer, Marico from the staples packs that is also doing well. Remember, we also had that Kantar 2025 brand report of Asia coming out, and a lot of these Indian staple companies have made it to that list. So good moves coming in across all of these consumption names as well. But you know, while we're so focused on equity, let's also throw the spotlight on commodity right now. And the commodity in question today is silver, and this is making the buzz as COMEX silver prices are near a 14-year high. Let's take it across to my colleague Sharat to give us an update about everything that's boosting the silver demand and what's causing this surge in silver prices. Sharat.
Well, yes, the silver prices are at their 14-year high levels, and silver is sparkling. The COMEX levels, it has gone past the $40 per ounce mark. Also, it's expected that the September Fed rate cut will actually fuel a much more rally in the silver prices. Also, the safe haven demand, that's expected to continue as what we have seen in the gold prices as well. But what's new this time? There's two important institutional moves, which is very important. USA has added silver to its critical mineral lists, and even Saudi central bank, they have started buying silver ETFs for the first time. Interestingly, there are important triggers also for silver, and this is just not a safe haven demand metal, but a very important use case in industrial space, especially in EV, data center, PV, and semiconductor as well. Now, Indian festive season also, higher gold prices might actually deter and make individuals move towards the silver as well as LGDs. Now, the shining gains, we have taken it on a quarter basis. Dollar returns, look at the numbers. It's been even Stevens for the first 2 quarters, but the entire change is happening in the third quarter currently, which we are in. 9% dollar returns for silver, while for gold, it is just 3%. Also, the exposure, where does it lie for the silver? This is, of course, there for Hindustan Zinc. The stock is having a gala time, so almost 4 to 5% up in the trade. Also, minimal exposure for NMDC, Vedanta as well, and jewelry stocks also, as they also have exposure in the silver space. Also, there are key silver ETFs in India where exposure can be taken by retail. These names include ABSL, DSP, ICICI, Pru, Nippon, who have at least 3-year history as well. And overall, let's just look at how the performance has actually panned out. The equity thematic PSU has given a 29% return, and silver ETF outperforming gold ETF as well as hybrid multi-asset coming in at almost 26% CAGR over the next 3 years. And analysts state that there might be more rally coming up in the silver space.
All right, thank you so much, Sharath, for getting us all those details. So yes, of course, barring equities as well, we are catching and getting to see very good moves in select commodities as well. But with this, let's move on, and let's also welcome Dhananjay Sinha, co-head of Equities Systematic Groups, joining us on the show right now. Hi Dhananjay, good afternoon, and it's turning out to be a great afternoon for the markets as well, because for the past 3 days of sell-off that we have seen last week, a good rebound, at least that we have seen on the Nifty 50. What is your view on the markets? And given that the consumption will get a lot of boost this time around, where are you placing your bets?
So I think the market response has been, has been as per anticipated this thing. So basically, we were expecting the GST reduction that has happened to really boost sentiment, especially for the auto space. There has been a sort of a reduction or announced reduction in the GST rate, and there is also an anticipation that the additional cess that has been imposed on the passenger vehicles, for instance, may also sort of get terminated after 31st March. So I think all those things are actually boosting sentiment. People are also anticipating that as the rejig happens, there will be certain positive spillovers that can happen for the FMCG and consumer space. I think that is happening altogether, and I think people are also sort of building in a scenario of better retail lending, etc., because of rate reduction by the RBI and lending rates being reduced by the banks. So I think all those things are playing out in the sentiments. We'll need to see how it pans out. But I would say that till the festival season, all these sentiments will sort of play out. And we are coming from a scenario where the market has seen a very, seen some amount of correction over the last few weeks. So I think there is some impetus that is happening. So some of the global variables, global factors, the fact that India is also trying to find an alternative in the eastern side of the world with more collaboration from China and Japan and Russia, etc., is also something that people are sort of, drawing comfort from. So I think there is a whole mix of variables that the market is sort of pricing in now.
Right, Dhananjay, lots at play, and of course we have that GST meeting on the 3rd and the 4th to watch out for closely. But other than that, Dhananjay, another sector that has been, staying abuzz and holding on to some positivity is the entire Nifty IT space. Today, too, after auto, it is the second most gaining sector, 1.5% uptick coming in on Nifty IT. And every time this IT group of stocks have gone up, it's not only been the large caps or the mid caps. Everybody seems to be participating quite equally and contributing to Nifty IT's up move. Dhananjay, what is the sense on Nifty IT? Is it only this outperformance, is it only because of the lackluster moves we've seen so far, or fundamentally do you believe these companies now look better?
So I think the uncertainty with respect to the IT companies has been there largely because of the US tarification, etc. There is a sort of implication while the tariffs are applicable to only goods that are exported from India to the US. There is an impact also on services. We are seeing from the trade data that government releases there has been a slowdown in services exports in terms of year-on-year expansion. So I would say that there is some headwinds, at least a certain amount of worry that is there. What I see in the market essentially is a rotation that's been happening based on how the market is positioned in terms of valuations. And the IT sector has actually seen a correction, and the investors might be seeing a certain amount of valuation out there, especially in the context that there is some gain in the opinion, common opinion that the Fed would initiate another rate cut. So I think that sort of a dovish Fed might be getting factored into the market, especially with respect to the IT companies, because lower US yields has a certain positive effect on valuation. I think this is entirely a part of the sector rotation theme that keeps playing out over time, that we have seen over the last couple of years. So I think what we are seeing in the IT space essentially might be a sort of a valuation churn that might be happening. So I think whenever it happens, I think the small cap IT companies outperform large cap because investors do get higher returns there. So I think that is how I would put it. I would say concerns on business traction, I would say remains. We'll need to see more commentaries from IT companies, especially US companies, how it is panning out. I think we'll see it in the coming quarters.
Markets are continuing to hold on to that firm print of green, and at the day's high right now, almost an 0.8% jump is what you're seeing in the Nifty. 24,620 thereabouts is where the Nifty 50 is at. Similar moves for Sensex. Nifty Bank is also sprucing up quite well, although largely underperforming the Nifty, so not much to complain about on that front. But we also have the brokerage firm Nuvama that has come up with the portfolio changes in IT and BFSI. My colleague Ashesha is here with more updates on how they have rejigged their portfolio recently. What are their current underweights and overweights, Ashesha?
Yes, Nuvama has made some changes to their India portfolio. First up, they've downgraded the BFSI sector to underweight versus their earlier overweight rating. Now they're saying that concerns are now shifting from growth to asset quality. They also say normalization of credit costs itself is likely to weigh meaningfully on the profitability of the BFSI sector going forward. But within the BFSI sector, they continue to remain selective. So they say that they still like the top two private banking and insurance companies within the entire BFSI basket. They've also made some changes to the IT sector, where they've now upgraded the IT sector. They have an overweight rating now versus underweight rating earlier. They say that the sector underperformance in 2025 has now compressed relative valuation, so they are now very bullish when it comes to the IT sector, and hence they have upgraded the entire sector. They've also changed their rating for Reliance Industries after the kind of outcome we got from AGM last week, where they've upgraded Reliance to overweight from neutral, and now they're seeing value unlocking potential as far as Reliance is concerned, especially with the kind of announcement from their Geo retail arm, a Geo listing in the first half of the calendar year as well. As far as other sector outlook is concerned, they continue to remain overweight on consumer, telecom, internet, cement, IT, pharma and chemical sectors, but they continue to remain underweight on BFSI, industrials, power and auto. So they have downgraded BFSI and upgraded IT. These are the two major changes that they've done to their India portfolio.
Right, thank you so much, Ashesha, for getting us all those details. So downgraded BFSI, upgraded IT, and even bullish on Reliance. And as we can see, the Reliance Industries have actually recovered from its day's lowest point. Those were the changes that Nuvama has done. But what do you make of the markets right now on the technical front? Let's try to understand that. And let me welcome Ruchit Jain on the show right now. And along with Ruchit, we also have Raj Deepak with us. A very good afternoon, gentlemen, and thank you so much for your time. And Ruchit, firstly, your take on the markets. It's been a good start for the week, but how likely are we in to sustain these levels or rather build on?
Yeah, hi, very good afternoon to everyone. Well, during last week, we did see a very sharp correction from the 25,200 levels to 24,400. And the momentum readings on the lower time frame charts were quite oversold after this no selling pressure. So I think that after this GDP numbers which have came today's up move seem to be a pullback move. Although the downside on the price wise seems to be very limited from current levels because the 200 DMA for the markets is placed in this range of 24,300 to 24,400, which should act as a support. But on the higher side, until market is able to surpass the 25,000 levels, we think that we would see more of a consolidation on the index front, which would be a more of a time-wise corrective phase. And within this time-wise correction, those stocks or sectors which are very oversold would witness some bounce back from these lows as we are witnessing today. So 25,000 to 24,400, this seems to be immediate trading range in which we expect some consolidation. And in this consolidation, taking a stock-specific approach for the short-term trading would be a better idea. Those who are looking for gain from short term.
Okay, so that's the strategy coming in on the market. We also have Raj Deepak Singh joining us. So Raj, hi, good afternoon and welcome to the show. Give us your sense on the broader end of the market. The kind of moves that we've seen from the Nifty mid-cap and the small-cap space are robust today. In fact, the mid-cap index is inching closer to a 2% intraday high coming in. So Raj, amid a market setup like this, pardon me, where we have so much to look forward to in terms of events over this week. Case in point being the GST meeting. While this uncertainty still looms large, would you be preferring the larger end of the market, or do you also see some merit in the smaller and the mid-cap space?
Hi, afternoon. And well, I don't want to add that much skepticism in the market, but what is happening that after witnessing sharp sell-off in the last week of the settlement, derivative settlement, now we are witnessing some sort of short covering move. Not exactly the short covering, but a dead cat bounce, one can say that. And if you look at the stocks of the capital market space or the stocks from the defense names, they are the ones who are witnessing some sharp moves. Apart from them, it is largely focused towards those stocks who are going to benefit from this GST rate cut. So for us, what we believe that 24,800 to 25,000 sort of levels are going to be a immediate and major hurdle for the market. Till we are not moving beyond that, it won't be prudent to buy. It might be more just because of the short cover move. We might see a couple of days of bounce back, but largely we are also expecting more of a range bound to consolidation in the short to medium term.
Largely expecting consolidation when it comes to the broader market move, but market are saying no stopping because it's almost a 200 points of gain is what we are getting to see on the benchmark indices. But Dhananjay, just wanted to have your take on the broader markets, because with respect to the GST rate rationalization, very small pockets are too in focus. There are hopes that fertilizers as a pack, they can have some benefits. Other than that, from the auto ancillary side as well, select pockets can be a key beneficiary. And add to that list is the consumption basket overall. Anything that is looking interesting to you when it comes to the broader end of the market? Any pocket where you feel that still offers an opportunity?
I think we'll have to be fairly thematic in terms of how things will pan out. I think we are clearly of the view that structurally the government policies will continue to favor household situation, essentially giving impetus to consumption stocks. I think the responses are varied across consumption space. If you consider discretionary staples, autos and related segments, auto ancillary included. So I think that there is a varied response as of now. It does look like some of the auto names and domestic plays, essentially two-wheelers, etc., and even passenger vehicles are in good momentum. I think your numbers are pretty strong in the recent months, and I would say that we'll have to see whether it builds up into inventory levels and what happens to the overall realization. But we'll have to look at that. But I think broader traction would remain. even I would say even the FMCG companies have actually shown a very weak performance over the last 1 year. There is some pickup, but this is kind of very sluggish kind of revival that we see over here because of a large cap characterization out here. So I would say the smaller cap names in the consumption basket can actually do very well. I would say especially in the discretionary space. I would say that where I'm looking at is the energy space, especially the non-conventional energy. In the solar energy space, there is a lot of traction that is happening. So the stocks are actually doing very well out there. And also e-vehicles, you consider Ola or Ather, both of them are giving a good feedback in terms of the volume growth, etc. And there are good amount of activities that are happening on the business side. So I think these are some of the things that we are looking at. Of course, we are also considering. I think these are the things that we are looking at. I would say what we are sensitive about are the banking space, where we think that the business traction is kind of restrained. The income growth from interest income for private banks, we noticed, has come down to 6%, so 5 or 6%, which is a multi-year low. So that is a concern for us. I would say there can be a sort of a rationalization of government spending with respect to the infrastructure and related capital goods as we roll forward. So that is another area where we are not so positive about. So I think some of the deep cyclicals sectors are something that we'll be cautious about. And so I think this is how we'll play the theme.
Appreciate you joining us on the show today. Thanks so much for your time.
Thank you.
Okay, before we slip into a very short break, just drawing your attention to the flash on the bottom of the screen, we have the monthly auto sales numbers for August trickling in for Maruti Suzuki. Total sales at 1.8 lakh units compared to 1.82 lakh units, about 0.6% cut on a year-on-year basis, and this is largely in line with what the street was estimating. Maruti slightly, very nominally off the day's high, but nonetheless still a 0.5% uptick coming in. We also have numbers for the total domestic sales at 1.4 lakh units compared to 1.56 lakh units, down 7.5% on a year-on-year basis, but largely inline set of numbers coming in for their total sales, and Maruti almost at the day's high. But on that note, we'll slip into a very short break and keep the conversation going with our technical experts on the other side.
Definitely doing very good today, because and look at the move in Nifty Bank as well. That is also seen to be catching the move. 350 points of gain is what we are getting to see, while Nifty 50 is holding strong above that 24,600 mark. So the markets are in good shape, and so is the move in the broader markets. We have been touching a lot on all of these counters, be it from the consumption basket. Select IT counters are doing well. But which are the other sectors that you can bet on? Let's try to find out from Narendra Solanki, who is joining us on the show. Hi Narendra, good afternoon and good to be speaking with you. And Naren, I see that today a lot of these railway and defense counters, they are also having good day today. Is that a dead cat bounce, or rather would you believe that the valuations are still very richly valued? Or do you believe that after that recent correction, it once again needs a re-look? Because the GST rate rationalization will be through. So are you building any hopes that even these sectors can benefit out of it?
Yes, definitely. The long-term story is still intact, and there's a lot of growth runway there for these kind of sectors, especially defense sector, electronic manufacturing sector. Then we have renewable sector and the fast emerging BESS sector. So the growth runway is very long, between 5 to 10 years, and as and when the opportunity arises, then one can definitely look at it, and especially after the recent correction, the stock specific opportunities have definitely become available for some of these stocks in these kind of sectors. So definitely one can make the use of it and can add to the portfolios.
That's the take coming in on that. Raj, want to get your sense on some of the stocks that are doing very well, and they're at their 52-week high. Now, we have been talking about the auto pack, but want to get your sense on stocks in particular. You have Aisha, TVS, Maruti, and Uno Minda from the ancillaries that are at their fresh 52-week highs coming in. Some of them also at fresh all-time highs. Give us a chart check on some of them. Let's talk about Uno Minda and TVS Motors. How are they shaping up on the charts?
So, like I said earlier, also it's because of the GST rate cut. What we are witnessing is more of a across the board buying. So while TVS Motor, stocks like TVS Motor, Uno Mindo, or even the Maruti, they have performed significantly well. What I would like to prefer those names who haven't shown any kind of volatility or shown significant resilience in this recent market volatility. So across the board, auto space is the one which has shown significant resilience. So despite almost 60,000 crore selling pressure during the month of August, entire auto space that has remained largely intact. There wasn't much of the price pressure what we have seen. In the second tier names also like Exide Industries, the stock has been maintaining some and holding its level somewhere around 390, 400 odd levels, and currently it's moving higher on the back of very good delivery-based buying. So there are a few names which are likely to perform much better even in the coming session. So I would prefer stocks like Exide, might move even 440 to 450 odd levels in the days to come.
Okay, so that's the take on some of these auto names. Ruchit, coming to you, give us a sense of some of these railway counters. Some of them are shaping up very well in today's trade. Case in point being RITES, that's up 6% as we speak. RVNL is doing very well today. You also have Ircon International that's up 4%. How are some of these stocks shaping up? Because railway stocks, of course, they've seen quite the wave in terms of their stock momentum. So what's your take on some of these on the charts?
So recently, we have seen a huge underperformance from the railway stocks compared to the broader markets, the kind of correction that we had seen. But the stocks such as RVNL is there, RailTel is there. The momentum readings were quite oversold after this sharp sell-off, and they were also trading near at their previous swing low supports. So we believe that this is a pullback move because of that oversold setups. We could see some further up moves in the short term, maybe about 5 to 7% up move in certain stocks such as RVNL or even RailTel. But no signs of a trended up move coming in. So I think just because of some oversold nature, they were beaten down a lot. So hence some pullback move could be expected in these names as the broader markets have started showing signs of up move again.
Okay, so that's the take on some of the railway counters. Narendra, want to get your sense on the entire banking and financial pack. Today you have Nifty Bank that's doing pretty okay for itself. Nifty PSU Banks, that index is also up about 1%. Names like Union, Indian Bank, IOB, they're all doing well. Where in the broader financial market, it could be private banks, PSUs or NBFCs, where are you seeing real value and how would you approach this sector?
See, in BFSI, we are more looking towards banks and financial institutions which are having more of a retail presence because in second half of the current financial year, the two key themes are consumption, the growth in the consumption and the growth which is coming in the rural economy. So rural economy, we are seeing very strong growth and the consumption is also expected to pick up and gradually we are seeing some uptick in urban consumption coming back as well. So the retail prominent banks and financial institutions, we are positive. In terms of banks, we prefer PSU banks as a bank in comparison to the private banks. And in financials, we are positive on retail plays like Bajaj Finance and other kind of NBFC plays, Chola, etc. So this is our current positioning for the next quarter.
So that's the take on banking and financials. Raj, coming back to you, one stock that's doing very good and very well rather from the metal basket is Hindustan Zinc. Exactly 4% uptick coming in on this stock today. Of course, that's on the back of this rally coming in silver prices. And about 20 to 30% of the overall top line for Hindustan Zinc is derived from the silver segment. Raj, a quick chart check on Hindustan Zinc. How is this stock shaping up on the charts?
See, well, in terms of leverage, the open interest is relatively low in this name, and what we believe that stocks like Hindustan Zinc, I would not be very buoyant on here because the stocks tend to come under F&O ban very, very soon. So, what we can expect that if it is able to maintain or sustain beyond 450 odd levels, then only we should consider that okay, there could be further momentum left in this name. Otherwise, it has been largely consolidated in the last 1 or 2 months. haven't given any sort of price performance. Yes, somehow it wasn't able to hold its level. It hasn't corrected much, but at the same time, if you look at from the year, it has given so much of gains that it has corrected so much that I don't want to go for bottom fishing at this juncture. Like my co-panelist has said, the current bounce, it might be just a dead cat bounce after a sharp decline what we have seen. So here, the only stocks which we should be looking at are those who have shown significant resilience or their price performance was there despite this selling pressure what we have seen in the last 2.5 months.
That's the take on Hindustan Zinc on the charts. Today, among a lot of stocks that are buzzing, you have NCC that's buzzing on the back of a news flow coming in, Ruchit, wherein they've secured orders worth 788 crores from state agencies in the month of August. So quite a significant order win coming in. That stock is up 3%. But if we take a look at the longer term charts, let's first see the 1-year chart and then the 6-month chart. It's a very interesting chart coming in because the stock is lower by 35% over the last 1 year, last 52 weeks. But the kind of recovery it's in the last 6 months itself is commendable. Ruchit, any thoughts on the way the chart for NCC is shaping up?
If we look at some positional charts, then recently also when there was a pullback move from that lows of 170 to 230, the stock did not manage to surpass this 200-day moving average resistance, which is not that great sign from a midterm perspective. So I think as the markets are showing some pullback, there could be some pullback moves in the near term, but unless the stock shows any breakout above 230, the broader trend remains a bit sideways to negative itself. So I think could be a stock where pullback move could be expected, but certainly we would wait for a breakout above 230 to change the mid to long term view on this one.
That's the take on NCC. Other than that, you have a couple of stocks today that are in focus, and you have OMCs. Narendra, the entire basket of OMC stocks is in focus today because the rate of the 19 kg commercial LPG gas cylinder has been reduced to 51.5 rupees, and in Delhi, the retail sale price of this is going to be 1580 rupees, while there is no bearing on domestic cylinders. But Narendra, overall, we have seen the kind of news flow that the OMC companies have been dealing with both upstream and downstream. Where are you seeing this entire pack headed on this news flow, as well as everything that's been happening geopolitically, and how some of these stocks like HPCL, BPCL, IOC, ONGC, how do you think the approach here should be?
Yeah, definitely. This space is very volatile and this is also impacted by various geopolitical events occurring. And in current scenario, a lot of geopolitical events are happening, and a lot of things are still uncertain, especially in terms of crude oil demand supply situation, and as well as sourcing related issues are there currently. So right now, we have a cautious approach, although we are positive overall on the sector in terms of volume growth, etc. But because of the current uncertainty regarding the geopolitical, I think a cautious approach should be there for the sector.
Take on some of these OMCs. Raj, a chart check on any of them? How are they comparing within themselves? How are they stacking up within their peers? And which of these OMC names are looking more attractive on the charts?
I believe that IOC seems much better placed in terms of risk reward at least. With the stop loss around somewhere around 135, I can look at it. But overall, not expecting that there would be a runaway rally in any of these names due to various geopolitical and even the local issues. So what we can expect that the current pullback may extend towards 150, but beyond that we need to look at how the data pans out. But which as of now, the upside seems limited here.
Okay, so that's the take on both the fundamentals and the charts on some of the companies like HPCL, BPCL, all of these companies that are in focus, the OMC group of stocks. But let's shift focus and talk about the insurance space. We'll get to that in a bit. Before that, the Supreme Court has dismissed a public interest litigation petition filed against the rollout of 20% ethanol blended petrol without giving consumers the choice to opt for ethanol-free fuel. Samir is here with more details on this court ruling. Samir.
So that was an important matter listed in the Supreme Court, and it was to be heard by a 2-member bench, which included CGI, Chief Justice of India. And this matter was related to the ethanol blended government's petrol program. So Supreme Court has dismissed this PIL that sought to have some sort of clarity related to the ethanol blending petrol program. This PIL that was filed argues the important point that it mentions that there should be a choice that should be given to the customers that what sort of petrol they want to opt for, whether it is ethanol blended petrol or non-ethanol blended petrol. In addition to this, the petitioner also argued that though ethanol blending petrol, it is a natural progression, but there are vehicles, millions and millions of vehicles which are not compatible or not designed for a higher ethanol blended petrol. So that sort of clarity should be given to the customers and the choice to have a ethanol or a non-ethanol blended petrol at the petrol pump stations. But Attorney General representing the central government argued that this petition has got some vested interest. In the court, it was also mentioned that there is a lobby which is working against this entire mega mission of the government, that is to have ethanol blended petrol in the country. And based on these sort of counter argument, one argument was also made by the Attorney General that this entire program is actually benefiting the sugarcane farmers as well. So after listening to both the sides, now the Supreme Court has dismissed this PIL, which will definitely give some sort of relief, and also a larger context is that it will provide a much needed clarity to the central government. And this PIL can also be seen in the light that recently the government has been facing a lot of criticism that because of the ethanol blended petrol, the performance, the engine performance of the vehicle, it has gone down. Corrosion is there. The mileage of the vehicle has decreased significantly. So these sort of criticisms are there. But yes, when the PIL was filed, it was very much interesting and important to note that what course of action the Supreme Court will decide. And now, importantly, the Supreme Court has dismissed this PIL.
Okay, Sameer, thank you for taking us through all of those details. But like I was mentioning earlier, the insurance space is too in focus because the government has issued draft rules for 100% FDI in insurance. Remember, the move was proposed in the union budget earlier this year to hike the FDI limit from 74% to 100% in insurance. And my colleague Anurag Shah is here with more on what this draft entails. Anurag.
So government is moving ahead on 100% FDI in insurance sector, and draft notification has been issued by government, and in the draft notification suggestions have been asked in next 2 weeks, and suggestions can be sent to Department of Financial Services Secretary. So as per the draft notification for the 100% FDI, the automatic route permissions will be granted and under the oversight of IRDA. So under the automatic route, companies can come and set up the company with a 100% FDI. And one major mention in the draft is related to the key managerial position directors, that the removal of Indian resident clause in the draft notification has also been mentioned. So it's a big development. That will be completely removed for key managerial persons, the directors and CEOs. The Indian resident clause will be removed. And as it was announced in the union budget by Honorable Finance Minister, so now government has fast-tracked the 100% FDI for insurance sector.
Okay, so that's the take coming in, the latest on that front, and we'll keep you updated as and when we have some progress on that front. But let's talk about the latest economic indicator. We have the GST numbers that are in for the month of August. We have the 1.86 lakh crore mark. That is the figure that the government has collected in terms of GST for the month of August. And gross GST collection has grown by 6.5% for August. The CGST collection stands at 34,076 crores, which is the central GST, and that is the prima facie number that we're getting. Now we'll try and get you more updates on this front as well. But before this, we were talking about the entire insurance space, and Narendra, coming to you for your view on insurance right now. What is your sense and what is your take on this sector? And if you really had to approach this sector and play this sector, would it be via life insurance, general insurance, health insurance? What would your approach be?
Yeah, in terms of insurance, I think we prefer life insurance more in comparison with general insurance and reinsurance sector. And in life insurance, private players are the best top picks for us. And for private players, if you see the latest VNB growth data has been very promising, and the private players has also been gradually gaining market share in comparison with the PSU players. So yes, life insurance and private player life insurance would be the preferred choice in the insurance.
Take on insurance, but time now to get in some BTST ideas from our techies. Raj, you go first. What has made it to your radar today? What would some BTST ideas be?
Well, I would go for some capital goods name like Siemens, and what we believe that the overall pressure what we have witnessed in the capital goods segment, particularly led by ABB. So here onwards, we might witness a round of short covering in all these names. So Siemens would be the stock which might move towards 30 to 50 in the short term. So that would be my idea for the tomorrow.
Okay, and Ruchit, what about you? What are some of the BTST ideas that you would recommend to our viewers today?
So a couple of names, that we like at current levels. One is Hindalco. We have seen that, recently post its quarterly numbers, the stock gave a breakout from its previous swing high resistance. Last 1 week, when the markets were not doing that good, the stock consolidated within a range, showed some consolidation. It did not break its 20-day EMA, and now there are signs of resumption of its uptrend. So Hindalco can be bought at current levels with stop below 702 for potential targets around 735. And auto ancillary space as a whole is doing quite well, within which Exide Industries, one auto ancillary name, is looking quite bullish on the charts, where there has been a good price volume action recently. The price up moves have been supported by good volumes, and we have also seen a breakout from its huge consolidation phase. So Exide is another stock which is looking bullish. One can buy at current levels with stop below 400 for potential targets around 435 to 440.
So Hindalco and Exide, two stocks that Ruchit is lacking at the moment. But Ruchit, while you're with us, also give us a sense on where we can expect the market to, open tomorrow, given that we've seen a very good move coming in today, 0.8% uptick coming in, 24,620 thereabouts. Ruchit, any near-term visibility on 24,700 and higher?
I think quite possible we may see that in tomorrow's trading session itself, maybe around 24,700, because today's up move is not that we have seen very stock specific taking the markets higher, but it has been a broader market participation, and since the momentum readings were quite oversold, so I think 24,700, which is the first resistance, followed by 24,800, these levels could be tested in next 1 or 2 trading sessions itself. So at least to start with, I think tomorrow we could see new levels around 24,700.
Okay, so 24,700 expected to see tomorrow itself. And Raj, closing thoughts, where do you believe the market could be headed, not only tomorrow but over the course of the week, given that GST meeting outcome will also be out?
Sip, if you look at the markets, then we need to find out how the bias or the short positions which we are witnessing in the market are going to change overnight. So as of now, perhaps there could be a bit of short covering, but since July onwards, we have seen these 200 points move almost 7 to 8 times, and none of them had 55 in further gains in the market. So as of now, I would remain skeptical in the market. And secondly, tomorrow we have the first Tuesday settlement for the Nifty. So as of now, I'm not expecting much of a directional move. One thing I can say that, okay, 24,500, 550 odd levels, that should be respected tomorrow. But on the higher side, I'm still not expecting that Nifty will take away 24,700 levels very easily, at least by tomorrow.
Outlook coming in for our market tomorrow. Of course, all eyes are going to be on that first Nifty weekly expiry that we have on Tuesdays, and that is going to begin tomorrow. But Narendra, Ruchit and Raj, thank you so much for your time today. On that note, we'll start winding down.